Hey guys, it's CJ Investing here. Welcome back to my channel. And today I just want to talk about just some things that I love about the stock market on my journey from starting investing in February of 2020 before the market crashed just until now, and just some things that I've learned as well. I learned my journey. So let's start with the lessons first. So I've learned, I just learned patience. Patience has been one of the biggest things. Because when I first started in the stock market, I was very impatient. I was trading in and out of stocks. I thought the stock market investing was trading. That's what I thought that came to mind when I heard investing. Because everywhere I looked, everybody was just trading. Everybody was doing options. They was day trading and all of that type of stuff. And so I would watch live streams on trading, and that kind of influenced my decisions, because what you watch influences your decisions. So I was trading in and out of stocks. Once I seen a little bit of green, a little bit of gain, and I sold out. I think a couple times I doubled up my money, and I was really, really excited about that. Back then I was a growth investor. I wasn't into dividends, and I was investing in little small cap companies, small market cap companies, little startups. They call them SPACs. Special Purpose Acquisition Companies. That's what SPAC stands for. So it was a lot of them back in the year 2020, and like hundreds of them was going public back to back. There's always a new thing out. It was companies like Celsius. You know, you had your Nikolas, where it went bad. You had Hyliion, which I was invested in a long time ago, and people were investing just based off of what they felt, feelings, and that's very dangerous, because once the stock market corrected, which it always does, it goes back to the fundamentals of the numbers. It's always going to come back to the numbers. So numbers outweigh feelings. You got to remember that. So it's going to always be a game where your research and how much due diligence that you do in the end, that's really going to pay off. You're going to want to vet the good management teams. So I wasn't researching at the time. I would look at a few. My research was just me looking at a couple of articles at a time, and that wasn't really helping me. And then I went to the next big thing, which was crypto at the time, and that was even worse, because at the time I didn't know what I was doing. I still don't when it comes to crypto, so I just stopped investing to it. But at the time I was investing into crypto, and I'm really not a big fan of it now. At the time I was just going based off of what other people was talking about, what other people felt about it. So I threw out a little bit of money into it, just testing the waters. And it was very volatile. It was a little bit nerve-wracking. And I eventually got out of it once I seen. I said, what's the point? I can make more money, more safe money, quote unquote, over in the stock market, investing in dividends. Now, when I first started, I was invested in growth and dividends, but I was mainly focused on growth. But then I transitioned to dividends purely, and I'm still developing. I'm sure my strategies develop over time, but it was all about making the quick money at the time. And it's better. There's a saying in the stock market, it's better, patience. The patience helps you in the end. Time in the market is better than timing the market, if that makes sense. So, patience will pay off in the end. Long-term investing is where it's at. Always have your 5, a 10-year horizon. Know what you're gonna do. Know what kind of returns you want to have. Just keep researching, stay up to date with your articles and stuff like that. And those were some lessons as far as I learned to, do my research, stay patient. Don't listen to too many people regarding their opinions and just follow solely that. Go off of what you believe. And another thing I learned is don't buy. You don't have to wait till the company goes down a couple cents to buy it. If you feel that it's at a good value right now and you believe strongly in the company, just go ahead and buy it. It's not going to really matter in the next few years. You're going to make basically the same amount of returns over the next coming years. So just go ahead and pull the trigger and just buy it, because it's not going to really matter in the long term. And don't sell emotionally. That's a big thing, because your emotions lead to bad decisions, as I always say. So never sell just based off of emotions or what somebody else is doing. And I've sold emotionally before, back when I first started. And it wasn't a good feeling. If the fundamentals of the company change and they do something that you don't like, and there's a better investment that you feel that's out there, then you make the move. But other than that, me personally, I don't try to sell stocks like that unless I just find an entirely better investment. They're not doing what I want them to do. Like for instance, a dividend cut or something, where they completely cut the dividend. I might consider getting rid of them if they're not really bringing anything else to the table as far as growth. Because for me, you got to bring something, either growth or dividends. One of the two. You can't just pay a small dividend and have a smaller amount of growth that the analysts project for the future. That just doesn't make sense as an investment to me. There's a thing where you can have a great company. The individual company could be great, and the stock could be completely trash. Which I think is kind of the case with Apple. I was investing in Apple at one point in time, and the stock is just, it doesn't do a whole lot, and that's not their fault. It's just Apple is not in a growth cycle right now. No matter what they really do, they continue to introduce products and stuff like that. There might be a small jump, but you got to understand at the end of the day, it's like a $2 trillion company. It's one of the biggest companies, if not the biggest in the entire stock market. How much growth do you really project for a company like Apple? Microsoft, which I plan to get back into Microsoft in the future because of how diverse the company is, and it has a little bit more growth. And they pay a decent dividend. We compare it to a lot of the bigger companies like the Johnson & Johnsons and just the popular dividend stocks, Home Depots, Lowe's, stuff like that. Its dividend isn't all that, but they have room to grow it because they don't pay a lot out of their cash. They have great margins and great cash flow. So that's another stock to check out. But there's plenty of opportunities out there. And just some things that I love about the stock market. It's I look at the stock market like a bank account, a second bank account where I can park my money. And because I feel so confidently about it, I can park as much as I want, as long as I don't put my bill money into it, or I'm able to handle my other business. I think it's fine. You only are supposed to risk as much as you're willing to lose in the end. return. So risk what you're willing to lose. So I do that. At first, it was just a small amount. Now it's a larger amount because I got a retirement account, a Roth IRA with Fidelity, and I deposit in there just about every week my paycheck, and that's a consistent thing I do because when you do it on a consistent basis, it breeds results. You can reach your goal much faster if you're consistent with it. So yeah, so some reasons I like the stock market is, you have you as an investor, you have control over your investment. You have some control over it. You can invest in whatever you want. Some of the latest and greatest companies out there, some of the companies that you use on a daily basis, you can invest into. And it's just exciting. It's exciting to me, doing, maybe not necessarily doing the research, but researching and just seeing it pay off, even if it's slowly. I just like seeing, and I don't care about my company or my stock going up in the short term. I'm really concerned about the long term. I prefer it actually go down so I can buy more of it at a cheaper price. That way, I increase my returns over the long run. So I just like the control aspect of it. And the fact that I can tie it back to a physical company or product. Unlike crypto, which is why I got out of crypto, because I didn't understand it and there was nothing really physical about it. So that fact, and just the flexibility of stocks in general. But it's all about your investment strategy at the end of the day. You have to develop one. Me, I'm a dividend investor. I might get back into a little bit of growth investing in the future, but I'm only sticking to companies that are profitable. I'm not going for unprofitable companies that aren't making revenue, because back in 2020, that's what everybody was doing. They was buying these companies that didn't make no revenue just based off of feelings. And that's not good. That's not what you want to do. You don't want to base things off of feelings, because you end up getting hurt in the end. So always do your research. Look for companies that are producing revenue and stuff like that. And if you're looking for the unprofitable companies, make sure you know how much you want to risk, and make sure you're well researched, because they're very volatile and unstable, and you never know what they're gonna do. So I'm not a financial advisor. Always do your own due diligence, as I say. These are just my thoughts and my opinions. I'm just sharing my experience, some insight, maybe to provide some value to some beginner investor or something. But I appreciate every one of y'all. I love y'all. Hope y'all keep doing y'all thing. Good luck with your investments in the market, real estate, whatever. I wish you the best. Stay tuned for more content like this in your algorithm. And y'all be safe out there. I'll catch you later. Peace.